Right, so back in the account here, you have to find my recorder now. I don't know what happened to this thing, but this is the new normal. Software that just stops working. Okay, so into the just trading the euro dollar only here. And yes, it's true. Most of these orders are buy tickets because it wrote a very complex buy system. Buy only. Well, there are some sells in here. I had the hedges there. So here's the story. If you, this is the beauty of forex, is that there's no bear markets or bull markets in forex because you could just go to the next currency. If you always trade on the long side, I mean, if you're always looking for buy signals only, of course, your targets are going to be the seller's entry. So you already know where you're going to sell and where you have to sell, and when the market's dead, what to do about that. So when we closed into, I said I was going to go flat at the end of the day, and it pretty much went flat on, let's see here. Let's take a look back. What happened? So it's Friday, and I say, oof, I cashed out in a range that went something like this. I can't tell you the exact numbers, but we're streaming out. I said this was the line in the sand. We have to make it above that. We punch above that, then we just fizzle. So when I finished off the video, we were here and they bought more on the pullback here, and we never hit this. We never took out the day, previous day. We did take out the high of the day because this is the high of the day at that point, and then there was this one more blast. We drift back. The market goes delta, so we either could have put on a hedge here, but our targets need to be 10 pips, 15, because this is 25 pips from here to here, so it's a pip based trading system. There's no percentage risk of counts. You have to determine how many bullets you can afford to launch, how much ammo you can blow on one idea. Somebody said they'd blown up a high leverage account. That's only because psychologically you think you have more money than you do, because you can actually be in a $1,000 position with like 33 cents invested. It's pretty good. So you can easily mistake. It's like having a gun that's just killing people, and you're just playing with it in your house, and it's going like 1,000 feet out somewhere. Some ray gun. It's like having a ray gun and wondering why you got carnage. Right, because you just don't realize the power of the leverage. It's not the leverage, is the unrealization that, because if you also, if you have to put down, if it's 1-to-1 leverage, and if you do that, typically if you go to the bank, the spread's 500 pips, or more, maybe 300 to 700 pips. I'm sure it's a 1,000 pip spread if you go to some laundry bank, a bank that has a rent cycle. And this is a pretty fair game here. I'm waiting for this thing to take out the low of yesterday. So right now it's about, what do we got here? My clock's not showing up. Use my yellow. It's about 1 o'clock in the morning. So I'm just going with the chart. I can kind of tell, at least if it's quarter after the hour, using this as sand through the hourglass. So if you build a buy-only system, which I've done primarily, I have limits, I have stops, very few stop entries. So it's mostly limits at the market, 5 pip stops up to 50. Almost every, I'd say 25 pips. This is just typical stuff. 20, 8 pip stops. 8 pip take profits. I got some in here that are trying to stay away from the bad ratios, but sometimes you have to, instead of getting, since I'm trading so many tickets, if I lose 22K because it's just allocation of risk across a bunch of tickets, that, okay, at some point you'll say, well, if I get stopped out of that and I got to get back in the market because I put too many orders in too close, so what is the point at which rebuying the spread and the commission starts to be a burden? You might as well just put a wider stop in a smaller position because it's the same risk. That's the baseline. Talk about, okay, the baseline for me is, what is it costing me for this dumbass trade? This one ticket, what is it costing? Should I go in super high res with my tickets close together for the next hour or 15 minutes? So if I'd taken this, go to the next screen here, and I could just look for a buy on the Canadian dollar or the dollar to the yen. They're going up tremendously. Now, because I don't want to commingle these accounts, on another account, you'd be killing it, obviously, if you go to the dollar. This is why people trade more than one currency, because in forex there's no bear market in forex. Certainly there is an up and down for each instrument that you individually trade. You could trade that both directions. Now you got to write both sides of that. After you get done writing the buy side, you're thinking, if I wrote everything on the buy, then I'm going to go right on the sell. Okay, that's going to take me about a month. And I'm probably just going to go, why don't I just put limits down? If I think it's tanking, I can either go in front of the market with limits, and I can do a non-directional trade on the way to that. So that's my bridge, is to take a non-directional trade on the way to the directional trade. Also, it lets you run money management. So if you get filled, so after the market makes a price pulse and it moves, put on a hedge. Now it makes another move. It should be, depending on the expiration date, expiration times of the bracketed tickets, what is the likeliness of that filling? So the longer the market goes sideways and the more you stack up the buys and sells I'm talking about, each one is a different price. It's like the 128 Crayola crayon setup, as opposed to coming at it like with more analysis and one bullet. Like, you got your target. I was listening to a guy talk about people, the Democrats are doing this, they're over target focused. They focus too much on the target and they can't see what's going on, the whole big picture. Also, right, so you'd have to have a separate account. And this is why people would say, oh shit, I should have stayed in that trade, that was going well. And so right now, Euro and the British pound are in the same boat right now. They're both suppressed and consolidating at the edge. Look at this 1 hour British pound, very, very tight. Now you could put on the hedge here, but it's hard for me to keep track of the other trade if I commingle all these funds. So that's another problem. I mean, I don't know. I think I'd like to have the phone bills paid by a certain checking account. So if something goes, they have more than one account. Everything's commingled. You can't tell when something's fucking up. You can't really. So you have discrete money that's like, oh, I got this there, and I use that to do that. Like I buy silver with this account, but I don't take. I mean, how can anybody keep their books? I don't get it. So you kind of have to treat your life like a business, so to speak, on some level, where you've got, okay, that's just does that, that does that, that does that. There's no confusion. You know, that's what they do. I'm sure they do that at these hedge funds. They have like a guy that's like, he's the British pound guy over here. Or I don't know. He's keeping track of it. Somehow somebody's keeping track of it, but I can't do it because I'm trading like, I guess, they don't have like this cloud system. So I'm just saying I'm going to take X risk for the day. It's a risk based system, and so it's the challenge is finding the pockets that are going to pay you, the vacuums that are going to pay you for the scalp, the quick money, or the, let's say that there's a high probability trade, then there's a low probability trade. There's kind of like an outlandish bigger picture. I mean, outlandish from the sense that if you admit that you're trying to make 20 pips, but you've got 1,000 pip targets on the monthly, unless you're going to trade as a scalper and a swing trader, then why bother torturing yourself with that? You know, it's nice to think of, oh yeah, it's going to eventually go there. Yeah, there's a lot of, during the consolidation phase, 80% of the market's getting ready to make a big move. That is tradable. It's more work, but it's actually a little bit more high probability that it's going to keep churning. And then eventually there's going to be some pressure or lack of pressure building up above and below the market, and it's going to rip. So you either go hunting for buys, and yeah, I'm a bull because from the stock market, it's easy for me to see, oh, that's a skinny cat dead bounce, as opposed to that's a fat cat dead bounce. Holy fuck! That's when you'd put the hedge on. Okay, so this is like insider secret shit. If you have a fat cat bounce, the hang time's very like delta flagging out, and then the cat not only does the fatter the cat, the deader the bounce. Then there's a huge another level of taking out like 14 or 28 floors to the south through all the support that goes back on the weekly, the monthly, the blah blah blah. You know, you can see it cascading. So here we've got the dollars kind of really kicking some ass. I don't know if they raised or lowered the interest rates. I can't remember. And our thoughts and prayers go out to Ryan Brown, who's fundamentally trading the market. But I guess he got this deal, amazingly. Wow. I should try that. He got some deal doing the books for some European account. Some private equity. He's at private equity. But yes, I think that this is the answer, is to trade, to have a range trade and have a trend trade system simultaneously, and have a breakout system, which would be the volatility increases and you get in before the thing leaves the station. I listened to the latest no nonsense Q&A, he calls it. I mean, it's 15 minutes of the intro just setting up all the bullshit. Don't ask me the same questions. Talks like a mafia boss, forex guy. I think he's working with Trump or something. If I've not answered, if you got a question, go read the materials. Don't bother me with this nonsense. I got time for this. Don't you know who I am? Time for this. So it looks like we're about to step through the floor here on the British pound. Now this is another classic possibility. Look at this vacuum and look how blooming this fucker is. I'm so sorry, but if we take this, actually we've not taken out this wick, and this one is really kind of doesn't exist anymore as far as I'm concerned because we've actually gone below that. The other thing is, if you fix the scale and you have a trade plan that only makes 40 pips, you got to really look for the trades you would have taken here on the 4-hour chart. Now, you're going to need to have a little bit more money in your account to trade this currency because it just rips. Look at the breakouts on here. Now, here's a nice clean breakout of a small. You're running out of volatility, and then there's kind of a stop hunt just before the explosion. That's a nice clean 70 pips. Put on a hedge here. So after a price pulse, down, 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 unless you're buying this plunge, then the only time you would have made money here is there's a fat cat bounce, here's a skinny cat bounce, here is a kind of a skinny cat. But this one is unique because it makes a new low and it feeds off of this. That is a 75 pip winner if you waited till here to get out. And just like you've seen in the euro versus the dollar, same holes filled. That's on Friday. We're done. I'm sorry, this is Asia here. So breakout, you're running a breakout strategy. See how complicated you have to have separate accounts. I'm sorry. It's no fucking way you're going to come English shit. You have to know that you've got this trade on here. Big fucking breakout system is pending. Now I don't have robots, but I can see what the robot needs to do. So once I find a robot builder, I'm sure it'll be very easy to convert this over. I just fucked up the chart there a little bit. Okay, so here, I'm looking at this. I'm trying to zoom in. Wrong zoom key. They look exactly the fucking same. There's another design flaw. Okay, we can put on a hedge right now. So if I was in separate accounts, I'd buy stops here, sell stops here. We could take advantage of this possible psycho plunge. It has to take out this wick. But here's where it's critical. When you start to dip into these fresh windows, yeah, you got to look back. Because the loomage leaves clues. If we go back on the 4-hour, you need to come down into here to see the next pool of insanity. Okay, I'm going to move. Let me just start over and delete these objects here. Okay, so it's like this. You have to look at only this now. This is going to be a big deal. And on the road to that, has anybody ever seen this Road to Ruta guy? Please tell me I'm not the only one that watched Road to Ruta where this fucknut talks about, well, I used to work at the Federal Reserve and this little kid's book is really a story about the end of the world. And the sad thing is, just like no nonsense, I find myself watching the Road to Ruta going, maybe he's onto something. I mean, obviously he's out of his fucking mind with Bull Pony. But Bull Pony just came in his pants because of the gold market went to 1,500. But I called the reversal. Thank you very much last week. So that's another sell I could have taken. My brain just can't hold all this shit. Just can't. I mean, look at gold coming off this beautiful Gartley pattern here. But I'd be a buyer in gold down here. I have all my buy limits here. Let's go hunt some retail. Oh, they were going to ads on TV. Look at this beautiful. We get a measured move. We're already at target right now. Weekly gold. I'd definitely be a buyer here. If I was a gold trader, and another thing is this is the grid here is set at $5. This is the $5 gold grid. So this is the only thing you need to know It's so funny, no nonsense says he has no baseline for the metals. He doesn't run a baseline. The thing about the metals is that it trades a different increment. If I put up a like a 25 pip grid on here, that's 25 cents. So that's probably the spread on gold. It's so funny that they outlaw a gold and silver trade in the United States. Yeah, because the gold and silver pits were like the COMEX is like, are you fucking kidding me? The truth is, the COMEX are shitting their pants. Yeah, that's the only big money. That's the only big banker issue you got. It's like deep state shit. It's the deep state of institutional. Yeah, the issue institutional trading. Yeah, the trade desk. I don't know. Everybody's a fucking expert. All these people. It's so funny. There's some clip of this lady from like a year ago talking about, well, they're just doing so many crazy. You know what? The world's still here. We're still here to complain about it. It's amazing. Yeah, this is going to be the windows here for gold at least, and also the this $5 gold handle lets you figure out, well, which trades can I do there at the market? Which ones do I have to wait for them to come down and fill here? And because it is a $5 grid, you can also see the rate of change. And it's funny because somebody asked no nonsense about the Anders pitchfork. I don't think no nonsense can see momentum. It's as if he needs a momentum gauge. Like he can't see that the car is moving. He needs a speedometer. Oh look, we're doing 60. Really? I don't know. I like to think I can still kind of figure out how fast I'm going without looking at the speedometer. Oh, unless we're fucking moving. Like if you're really moving, you're like, oh, I think we're really going fast. So that's where it's funny, because that's all the channel trading and all that stuff is about. The rate of change stays constant in a range sideways, and so you're either going to go with those structures. Plus, you get a top become a bottom at the channel. This is your perfect setup. But in essence, you're just getting the market's drifting. It's changing character. It goes into a channel because it's just kind of like an echo of the last price pulse, and then it tips beyond the pavement. It's right. Okay, now it's here. It's different. But it's like a dirt road where when you go down it, the second bump's created by the first bump because you have this momentum from the vehicles that are passing. Each currency has its own grid that's matches the other currency, but you'd have to adjust all that shit. You could trade like 5k in the Australian dollar, but you can probably only trade 2k in the British pound to keep your risk the same. So when you go to the gold thing, it's like, wow, you really got to be thinking, if the market does this, what's my total risk? If the market does X, and look at this classic story of trend here. You have the whole story here in gold on the weekly chart. This is the big line of scrimmage. Can we make it past this? We actually we doji out, I'm going to say, because we closed here and we opened here, so I'm calling that a doji. Anytime you see this, that's a doji. This is a whole lot of doji on the weekly. So how did this thing begin? Well, the trendline traders, or the delta flag wave 4, people are like, okay, drifting down. The market manipulators that manipulate gold, they got to push it down here and grab all the people that got all excited and bullish. This is the story that you'll hear about the market. See, they ran it up and they manipulated it up to trap you thinking, oh, it's going up. So you bought like a fucking idiot. And then you put your stop down here, and then they stopped you out and see. And then you were going to buy here, but you felt like, oh, last time I bought here, I got fucked. But this time it's a good time to buy here. Oh, why is that? So you could say all these things I'm saying, but that's just because you feel bad about it. You're like some Democrat that feels bad that somebody that's not a politician that has their shit together is running the country. People don't like other people to be. I remember in school, if you were good at something, you were the teacher's pet. So you kind of had to. If you knew anything, you kind of just had to keep quiet about it. You get the shit beat out of you, basically. I mean, that's just how it is. Here's a top. Now here's another thing you can also, because of the weekly chart, you can say, well, that's a top. I could put up. That's right at top at the 5-yard line. I could put a buy limit here. I could put now. If you start stacking up a bunch of tickets like here, buy limit, buy limit, buy limit, and then when you get here, this is where you really buy heavier. So what I'm saying is that if you're going to scale into the, as this drops, then yeah, when you get to here, I'm buying heavy, and here I'm buying super fucking heavy. I mean, who doesn't want it at this price? Don't forget, gotta get on the bandwagon, man. This is the weekly gold. It's so funny. You know, the ads they were all pumped. They ran if you notice the ads on the radio, and people were like, yeah, gold in my hands. Oh, well, it's only $50 here. I'm like, cold dead hands. So it's perked up here. I mean, so the people that are thinking that, I guess the Andrews pitchfork is kind of like a geometric fixed grid. So we have the geometric Gartley people. The Gartley people have taken it too far, though. Well, they've taken and blended Fibonacci with some fucking bikini top, and that is out there. At least the Andrews pitchfork people are saying we're a channel, but I have a center point, or you could have you could have 5, or you could have 10 channels in there. The idea there, you have a bias, you have like a miter box, you can say, okay, I'm just going to cordon off this. Every price pulse that walks back anywhere into my channel. So, if you have a bias, right, if you have a hammer, everything looks like a nail. This is why if you're biased to buy, you can take that bias and apply it any market you want in forex, given that you respect the pip issues and the risk issues per changing. So if you go from the guppy to the Swiss franc, you can't just take these trade plans, plug them. I mean, I know these people think they built some robot or some algo. If you don't consider the ATR of that instrument and how big you got to trade it to make the same signal produce the same amount of money, I don't think. I mean, people that trade 10Ks is a rule. Now, see, here's the thing: if your first rule is size, so what is your baseline? I say the baseline should be: is this going to cost you $200 or $20? Would you rather buy 10 cars for $20 or one car for $200? If you buy the one car for $200, you got to find a buyer. If you buy 20 cars for $20 or whatever the equal. Right, you're thinking buying this one $200 or 10 cars for $20. Your flexibility, your ability to say, okay, no, but the problem there is, oh, that's just not. Why buy maybe 3 cars suck? All right, but you 70% of your cars are good, and you're gonna sell them for $40. So you just doubled your money. How knows? Okay. So next time you're going to put in You're going to buy a $10 car, a $20 car, and a $30 car. You're not going to get good at, I mean, I don't think this is how you look at a hedge fund. Do you really think they're in fucking one singularity trade? Are they really in one? I don't think so, because I talk to people who work there. There's no fucking way. They're in this, they're in that, they're slightly in that, they're kind of in that. That's why the people have the Russell 2000. Big fat fucking index. You know, the Dow 30's kind of dynamic because there's only 30 stocks in that index, but you go to this Russell, what is the big one that's like there's a Russell 6000 or some giant blanket of all these stocks that give you a composite index, smoothing the data even more. The forex is over-the-counter, raw dog fucking penny stock shit. And the no-nonsense guy should understand that, because he's used to trade penny stocks. That's why the markets look the way they do. I bet if he ran his algos on the penny stocks, they work just fine, but he's just not going to. It's just too much. Nobody's going to do that. Nobody's going to. If you have something that's kind of making money, are you going to go start another business? Your business is going, I mean, you're really going to say, oh, now there's a singularity. So when people say, I'm going to open a coffee shop, they're not going to open a small coffee shop, a small hair salon, a small laundromat, a small car dealership. They're going to focus on one topic. So that's why people come to Forex. They go, I'm looking for one signal on this one. Well, the people that want to do the algo, they want to build a filter that's going to recognize an opportunity regardless of currency, because you have 28 pairs. You're saying, I have a scanner that can read 28 different planets. Each planet has its own gravity, its own atmosphere. Sure, the data, when you put the data up, it all looks the same. When you scale it to what it cost you to be involved in the up and down manipulations that have to happen. People have to come in and out of the market, manipulate it for you to win or lose money. So it only takes one big fat finger in the world to go against your trade. So when No Nonsense says stuff like, well, you know, somebody tweeted and fucked up the chart, they'll say the news fucked up my chart. No, that's just how the market is. I mean, that's an opportunity for some people. But yeah, if you're driving around and you're looking at your fucking oil gauge and looking at your speedometer, you're like, well, the engine's the right temp. You know. Also, does the car have an instrument that tells you you're going up or down a hill? So this is the rate of change issues. You know, when the market takes off violently, if it's against you, that is like a quick high temperature burn. If it's for you, it's euphoria. If it's in your favor, that move, and you have the possibility of thinking at that point, oh shit, I think I figured this out. Wow, that was a great trade. But and you're looking for setups. Don't forget, if you are looking at 28 pairs, you're looking for setups. Okay, let's go in this one. Then you have this harebrained stuff that this guy has. I guess he's got this 14 period RSI, 1% of the thing, and then the one candle rule again today. When you say stuff like the one candle rule, you just negate it. I mean, when you say, oh, it's all caper except for this, it just proves you cannot build a singularity program, the Holy Grail. Now, you can have the Holy Grail buy system, but you have Holy Grails. You have a hedge system, a breakout system, but you only apply it as need be. But each robot that's looking at each currency pair has to take into account the spread. What is the likelihood of the market exploding 40 pips as opposed to 20 pips on the other currency? It would have been a great trade on the other currency. Who hasn't done that? I mean, I used to trade the Australian dollar when the news came out, and I thought, gosh, I was right about that trade. I hardly made any fucking money. What the fuck? And I'm in this euro yen. I'll just never forget. I was in euro yen. I'm like, Jesus Christ, I'm getting killed and I'm getting rich. Like, what the fuck is going on? I didn't have a fucking clue. Then I looked at it and I go, because I was totally trading patterns, I didn't look at the pips. And then I put that pip grid up and I said, I think I see what went wrong. This fucking thing moves 300 pips a day. The other ones move 50 pips a day. And it can move 300 pips a day, and it typically does. I don't think that's ever fucking changed. Yeah, the markets might heat up. I heard no nonsense today say, "Oh, the markets are getting good." They're moving. It's great if you're in a trade and they're moving your what direction, but if they're moving and it's like, oh, we should be getting a signal any minute now. I don't know if that's the best approach. I think it's better to have your Canadian dollar account, and maybe it only does go long, but you're not going to get a signal, right? You're going to have a dollar. There's not a lot of dollar pairs, by the way. So for me, when I built it, I'm like, okay, I can go dollar yen, dollar CAD, dollar Swiss. Or you could take and write a whole new kind of move the decimal point like you would have to on the gold scripts, and you could go trade the I think it's the Danish kroner to the euro, which is almost a mirror image of the euro to the dollar. It could be the Swedish kroner. I think it's like DDK is the symbol. And you could do that. Looks like gold's going to melt down some more here. So if I was short from the very tippy top, and look how the gold went up and just nicked the wick again. Unfortunately, this broker doesn't have any history further back than this. It's pretty sad, but this top here, right at the 5-yard line. Yep, 1550. So, 1555. Yeah, I hope you didn't buy it 1500. Which I should have had I should put the grid on top that shows you the round numbers. So this is 1500. This is $5 above. You're almost up $10 on that if you sold from here. So I'd hold until you hit your 10, and then you're out, I suppose. That's going to make more difference. So people that are saying, I'm going to go trade the metals, and I'm going to go trade. Okay, the only thing that's going to matter in this situation for me is like, how much is it going to cost me? Right. If I sell, no, I'm sorry, this is $50 in here. This is 500. So at 1550, if I sell gold up there, if I started selling here, I'm underwater, right? If I sold at 1400 and go fuck them, then anybody that had gold, I mean, anything above here, people are selling into that, I'm sure. Come on. $200 move in gold. So, this is rare. This is a rare, I mean, this rate of change here, come on. So on the walk down, as you accumulate here, don't forget there's always going to be the guy, and we'll just assume this is, if 90% of people, this is such a stupid number, 90% of retail traders lose. It's like saying 90% of guys that go to the titty bar don't go home with a wife, okay? But for the people that, maybe that's not the best analogy, but it's something like that. But the drift down, okay, this accumulation as this walks down means that just by nature, your $50 stop is letting you hold that trade. You almost get stopped out here, but you're accumulating. Every week it drifts down. Here, it's a different story. Okay. If you buy limits here and here, 2017, monthly gold, if you buy 20 here, 30, 40, 50, you never get filled here, but you get filled on the big tickets here. You can see people that trade confirmation, buy, stop, entry. Their tickets are stacking up here. The people that trade really small monthly bars, they get filled on a hedge here. Underneath the auction floor, the limit guys are in already. The scalpers are going to cash out here. And they do. When it comes here, they get out. How do you know? Because it came and closed here. Right? The scalpers took their... And those the scalp design tickets cashed out here. Where the top becomes the bottom, it's obvious, right? You could have taken that trade. You could have taken just this little chunk out of the market. You could have rode it along and run a trailing stop, and you could have cashed out here. Nice clean breakout on the monthly. Never looks back. I'm back testing logic. Okay, really? Do you got to back test this? What's the trade now? Well, unless you want to put a buy stop here and a sell stop here, obviously there's no hedge available. It's going to have to be buy, 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 buy all the way down. If you're a gold guy, you don't want to be listening to William Defoe here. Down $80 on the monthly off the top of that, or it could be $5. It doesn't matter. So this could either be, if this is a 4-hour chart, this would be like maybe $10 or something, you know. So if you go to the time frame that you can tolerate, because you can see your trade on there. And this is the thing about back testing. What I'm doing is, I wouldn't say it's more like back viewing and saying, would this trade plan fit in here? Not from a pattern. It's just like, how many pips would it cost me to do that? How many dollar stops would I need in this to make that work? Okay, so here in the weekly picture, we're still dropping. If we keep going down time frames, okay, the problem here is that there's way more trades on here from the new lows on fair values auction. ICT blocks, they're all the same thing. So this window here, it's your classic. Here's your lonely wick. This is the Williams fractal. If I turn on Williams fractals, I'll bet you they're there. So actually, I'm kind of going. I'm fading the Williams fractal. Now it's just a classic indicator. It's going to say Bill Williams fractals. Okay, so I'm going to make them big. I'm going to make them yellow. This Williams fractal here is where you start selling. Okay? Just like this is where you start buying. This is established, okay? You're buying against Bill. Bill's trading breakout here. And he's right sometimes, right? If he buys this, I mean, if he sells this breakout, he's up on that trade right now. But I'm not trading one trade. See, I'm not trading one trade. And now you have to think, well, if that's true, then I'm buying this. Yep, You are. And if your stop's wide enough, you cashed out here and you cashed out here into this should be a Williams fractal. So the problem with Williams is I consider this to be a place to sell and this. I consider this to be a big deal, this hole. So this is why you have to take Williams. He's okay on the daily chart. If you're a low frequency trader, you get plenty of good. So you can just take and fade Williams fractals on 28 currency pairs, but you still have to take into account what's the spread and what is that wick window like? Is it 50 pips or is it 20? If it's 20, you got to double up on that currency, or you are looking for a softer risk. Now, this is a whole other thing, is if you're looking to trade lightly and you're trading the Australian dollar, I wouldn't bother trading the New Zealand dollar spread. It's not a very liquid pair, and some brokers, if you double click it, they're not going to fill you. There's nobody there. It's easy to have too many pairs. 28 pairs to me would mean, I don't even know. I mean, there's such, when you are in the dollar yen and you see the other yen pairs, they're kind of moving the same. So you want to be efficient, I suppose, as far as what you do time-wise. You really want to watch that one currency do that thing, or so now if I go to the dollar's really strong, and this is the argument, I suppose, why the gold's dropping, the pound and the euro are tanking. Let's take a look at the if I was to have a buy-only system, limits and breakouts. This is the 4-hour dollar yen, which we made money on some of these moves. Now here was a trade that I did last week, and it was based on the long side. We could have also got in on stop entry, the classic confirmation trade. Here I got a big, that is fixed, but I'm not able to stretch it. What's going on? These are 100 pips of these big black lines. 50-yard line is this, and the skinny guys are 25 pips, which is the markings on the right. Pretty steep market, pretty radical here. So another complete retracement ranging in this range. I see all the trades in there, so it's a little overwhelming here if you scrunch it. Like I can literally see, oh, I'd get in here, I'd ride it there. Now the zigzags here are just, this is max zoom out. It's ridiculous. You can't see the trades now. You can kind of see them here. I think this is what is difficult. If you take your algo and you put it on a 1-hour chart and you're looking for these entries, unless you're babysitting the market, I don't even know how you're getting on. I mean, look at this fucking mess. Wow. So to clean it up, go to the 4-hour chart, zoom in and ask yourself, this is 4 hours of price action. How can I get in this? Even if I think it's going up or down, how can I get in this market? I can't trade the left side of the chart, so I can either do cancel replace, but buy stop, buy stop, buy stop, or just like that gold trade on the monthly or the weekly, I buy religiously. Buy, buy, buy. Don't buy. Don't buy if it's up. You're accumulating the pullback. And you're gonna maybe you now here's where you have to cancel replace. Get rid of this ticket, move it down and make this 2K, make this 3K, make this 4K. Okay. Cancel replace and add one. So when you get in here, one of those is the scalp. One of them is the big one. And this is the lonely wick. This is the Williams fractal. In this case, you are going to count bars back. So, I mean, it does matter that is from here. You have 1, 2, 3, 4, 5, 6 bars back, but it's not negating it. It's confirming that this is at least a 7-day vacuum. This one here from this. Now, if you sell this, this is where people just go, well, that doesn't work. It only doesn't work because you didn't put enough tickets in. In other words, you couldn't absorb this. As they say in the depth of the Dom traders, your account could not absorb this rally. If you'd hung out long enough, you could have cashed out here or here. This is Doji land. So from a closing standpoint, the breakout traders, and just like every market we've looked at, on doesn't matter which currency pair you're in, you're going to see this. Let's take out the channel traders. Let's stop them out. They're long, running trailing sell stops to protect their position. Stop out, go your way. Has anybody been stopped out in their life and seen the market go the way their channel said it was going to go? Here's Andrew's pitchfork. See, this is the middle thread. I think it's kind of obvious, the Andrew's pitchfork, but because you can't see it if you're thinking, well, what's the speedometer say again? So you can't see the road you're on. This is the road to Ruta. I just can't even believe I even remember that. I don't know. It's just because I'm seeing this Federal Reserve bullshit again. Dude, don't you see that road to Ruta's like, what is this fucking Joseph Campbell? Joseph Campbell trades forex, trades the gold market. It's biblical. Bull pony. It's biblical. Oh my God. What's that country song? The guy says it's something like that. Or Lance Morissette. It's that song she does. Yeah, so now what? We're in the seller's window here on the dollar yen, I think. I think we trapped the last bull here maybe for a little bit. Pull back maybe. It's all maybe. I'm a big seller up here. We're in the sell window. This is the big. I mean, that made quite a bit of money selling in this carve out area. Right, that did pretty good. Comes back to structure. Double top. The price falls up. But still keep drifting. Got plenty of. So we could put a hedge on here. But it's not going to work for me unless I can have individual accounts running so I can keep track. Like if I buy stop here, sell stop here, because I have a small bar, I just got the signal to put the trade on just like this one. I put the hedge on here. This is where I'm cashing out. And this is where I'm holding and making money. So the hedge trade's making money, plus the limit orders are making money. So like a non-directional blended with a long system only. Because if I put after a big move, if I put the hedge, I lock a hedge on here, I got a small bar. Then when this comes back a little bit, it might take out some of my, cancel out these longs. Plus I'm adding by default. So I'm going from a non-directional system to a directional system. It's just, you need, the criteria needs to be, what is the last 4 hours? So you have 5 p.m., 1 a.m., and 9 a.m., 9 p.m. So it's 915 is all that matters on the 4-hour chart. It's just a crude, clunky mechanical system. Small bars, got a double top. That's not as important as the fact that the market range is small. We can put on a hedge. The scripts that are set to 25, this spread is tight here. It's the dollar yen. So you can trade the dollar yen, you can trade the euro to the dollar. If you start going to do this on the Australian dollar with a breakout strategy, you're going to have a hard time. If the spread's wide there, you're going to keep getting trapped and whipsawed. Now, it will pay off. Maybe once a week when the market gets super small in the 4-hour, but if you start trying to take advantage of a very small-ish bar instead of a really small bar or a real consolidated thing, but like here, it's going sideways, and it kind of does trap, but what's really going on is it goes up and takes out this 12-hour rooftop. Right, so everybody's aware of this, or at least the market seems to be aware, because when we tip into that window, look at the rip down. 75 pips on that. Not to mention, it is filling the strategy where you have trailing sell stops, the confirmation traders, everybody's in on that. So we retest this top. Sellers come in. Meanwhile, this is kind of a drifty. This is supposed to be the bottom. This bottom is rejected. Trying to kick into this window. But no. And the money management stacking up on that. Whoosh. But you got to get it. See, you got to get it. That's what the no-nonsense guy. Go get it. Sometimes you have to get the fuck out. That inverted hammer on the 4-hour, you're hitting the round number. Easy to do the math here. This rate of change is unsustainable. When I say my robot's going to get in here, because you're down more than 50 pips in 4 hours, there is a particular trade for that. Either you or the robot would get in there. This robot's going to buy, maybe if it's down 30 pips and he has a stop, and he gets stopped out. There's a robot here that gets stopped out. This one makes money. The limit bot's throwing tickets in. This is up really. The one that the 30 pips sell at the market bot at 4 hours. If it's up, it sells. Here it doesn't get triggered. It's not dropping fast enough. Here are the buy stops. So continually changing trade plans. Take advantage of a slight drift back. Here comes the bulls. They're going to get in this. They want a small pullback. It's not no 618 or. It's not a Fibonacci pullback. That's the thing. You just really. The Fibonacci thing, where are you hanging it off of? Where are you getting that number from? Right? It's like the Mueller report. Where are you getting that shit from? Somebody paid to have that written? Yes, this is fake shit. But we're going to run with it. I mean, trading currencies is better than trying to not throw up watching politicians talk fucking asshole logic. Zero logic is just so painful. Dollar Swiss, you'd have to trade this so fucking heavy to make money. But look at this nice clean, another would they just come stop hunting them bulls here? Right at the 100-yard line, you stop hunting them. You're down heavy. There's a trade for that. You're drifting here. Maybe you have a hedge on here now. You're really not going to make. You can't take the guppy scripts and run them here. They're not going to make. This is your fuck. This is 25 pips, and then they get trapped. That's too much. Now here, maybe you got pendings here. See, the limit orders take less work. You got buy limits here, here, here. Now these fill. There's the scalp. Another fill, another scalp. Then you buy all of this. Now here's where you're going to buy more than you've ever bought in your life. This is why it's counterintuitive. This is why a lot of people would say, well, why are you buying this? What are you, fucking nuts? Of course I don't think. Actually, the people that have moving averages that just happen to be at this angle say, of course I'm buying. It's a new uptrend. Don't be a dumb shit. But if the guy that has the fat tickets here, he's like, oh yeah, not only am I buying here, but I'll buy anything on the way there. And he just keeps buying. He doesn't buy the rallies. So you've already filtered your thing, and you're actually getting a very big position, and these become winners by here. And if you hold through that whole thing, they're winners now. But you know the seller's window's here. Come on, don't be stupid. Buyer window, seller window. Right, seller window. People are short that, or they cashed out. They're done. It's over. Just keeps drifting out. Okay, so your seller up into that on limits, doesn't matter. This thing, the dollar looks like it's just going to keep churning. Looks like the pound's going through the floor. The euro's going through the floor. This whole week we just dropped down through this floor here on the British pound is kind of like recovering. Okay, so we're getting into the opening of Europe now. Let's go to the 30-minute chart. So this could at some point this could dip into this window. I'm not watching I can't watch all this stuff. Here I've got a hedge on in the euro dollar, so I'm gonna load another hedge here because it's really, this hedge is kind of designed for this or the dollar yen. Dollar Swiss, I don't think it's not going tight enough to do dollar Swiss. I mean, 10 pip stop. So here I'm going to put on hedges now. 6 hours, 6 hours, 2 hours, 12 hours. This is the highest risk one. 16 pip stop to make 42 pips. If both legs fill, it's not really a good ratio, but then it's only double your money, so it's not that great. So this is the scalp one. This is 2 hours bracketed for 6 pip stop to make 16. I have to expand these and write some more of these though. The market must have moved. So when I'm double clicking, it says, "Oh, you sure you want to do that? Like what's going on?" Because I'm clicking very fast, and the first thing that comes into the buy stop, and if the market moves, although these are 3 pips away, 2 to 3 pips away, it seems to be freaking out the broker. He's like, "Oh, what are you doing?" Putting these two. I'm really going fast. And what it is I think the other one's not loaded yet. We're probably waiting to get the bid. So maybe the bid comes in, but the ask doesn't. So the bid moves. The ask, there's no ask data coming in. It's waiting to place the buy and the ask because there's a stop entry maybe. This is the way it's coming in. So I am bracketing it. So there's 2 tickets. Buy stop and sell stop here. So this is the obvious trade plan at this time of night. So I can put this in and go to sleep. Now, I will write it down. I'm slightly short maybe on this. Even though I'm also really hog long, and I have wide stops, 50 pip stops, 5 pip stops, 8 pip stops, everything, 9 pip stops. I'm in $1,700 of margin. I'm really going to load up. So psychologically, this is really a big relief, is to just say, I don't know where the fuck it's going. I'm going to put on a hedge. Okay. Now you can screenshot this, but I'm going to delete it. Okay, so there we are. We have the hedge on. We haven't filled on the buy stops or sell stops. If nothing's filled, it's a longer comment here where the short ones are the fills. I'm long. I'm underwater by. I think I have 50 pips stops, so I can endure a lot of punishment as far as drawdown here, and the leverage isn't that high. It's only 500 to 1, so it's not like 1,000 to 1 or more, 2,000 to 1, which they would let me just go nuts using the free margin. So the free margin is 1,700 here. Sorry, I'm in $1,500 position. So the free margins, when looking at it, is like how much more rope do I have, and if the market starts to crush down here, and I do take on another on these hedges, I take another $200 or $300 of margin or investment. I probably only have $1,300 of free left, and of course, that's if some of these get filled to the long and the short end. This is a way to ride. This is a way to trade breakout trading and just on your destination to either your entries, or it's going to cash out on the way there. It's going to soften the blow of your directional trade. So if you could trade purely non-directional, you would never. Your accumulation would be, if you did it like this, where you buy stop, sell stop, your accumulation is going to be based on the market taking off. Okay, if you're going to build that, it's going to be a big explosion. It's going to take you time. You're going to still take a drawdown, but it's a different kind of drawdown because you're kind of getting filled here, filled there. Now you're getting sized. And when the market explodes and it's done moving, whether you're up on these positions or not, you're going to have to decide, well, did I put too many scalps in? Or did I put enough scalps in that I'm really out of about 80% of the whole position? Should I get it? This is why if you trade one currency pair, you can keep track of that. Okay, well, let me go flat. Also, it allows you to close all open and pendings on one instrument. When you commingle these trades, when I commingle the trades, I'm like, what the fuck? I don't want to get out of that position. So if I close all open and pendings, and it's like, oh. And if you have also the terminal's freed up, you can see the tickets now. If you're actually going to stare at all the tickets on here and look at them. So these are all 1Ks on here. So my worst trade is I'm down $4.50. I'm down almost 50 pips here, ready to get stopped out. This is the market order with the 50 pip stop. These are market orders with like 5 pip stops, 6 pip stops. So I do have the ones that say stop, so the comment should say, okay, here's a hedge that got filled. I know it because it says 4-hour stop. No sell stops filled though. So the last hedge I put on. Oh wait, here's the sell stops filling. No, these are pending to be filled. So yeah, I'll go. So somebody asked, can you sell? Yeah, there you go. So it's going to get filled, of course. When it's 10 pips from being filled, it's going to flash color. So I'm about to get filled on the sell side. I think it is going to tank, so I will ride that hedge down. I'll put more hedges on right now. Just before we break down, we should get a gust. We're going to make like a low. I think we could probably go down at least 100 pips here. Okay, you're basically making new lows. Okay, you're making like 2-year lows. You're coming into territory here. If we could look at the 4-hour chart and dial into this price, like look at this now. Once you take out the low of last month, because this is a new month candle starting here, easily 35 pip drop here. I'm gonna put more hedge on right now. I'll take a nap. Let's see where it's at. But okay, so there, it's gonna sell in a confirmation breakdown. If we keep going down, it's gonna turtle into it. Turtle traders sell low and buy lower, and they buy high and sell higher. So they buy into it and they sell into it. Total confirmation trading. So look at the 30 minutes, and if you would have had a 30-minute robot put a hedge on, he'd be short right now by default. A robot on the euro is realistic on the 30-minute chart. On no other currency pair